We are recapping all of the market action for Tuesday, August 6th. Before we do that, here is a way to avoid every major market drawdown in history. First, looking at volatility index futures. When the volatility index futures get priced into backwardation, when August futures are priced higher than September, September higher than October, or October higher than November, so on and so forth. In commodity markets, you might see this referred to as contango. All right, for volatility, it's called backwardation. We saw this in March 2020. There was VIX backwardation before the COVID crash materialized. We have this currently. Okay, so we saw this turnaround Tuesday. It might be trending. You bought the dip. You're feeling really good. Something to be aware of. Okay, the volatility is still in a period of backwardation. If it subsides, that's a good thing. Credit spreads, meanwhile, we see this green line here for a near-term trend line. We've broken out. The white longer-term trend line, we're getting up toward testing it. Every time the credit spreads blow out, you see trouble in the markets. Okay, so we're not out of the woods. I guess that's the main point. If you want to check volatility futures, by the way, let's get the old dumb head out of the way. You can just go onto CBOE, look at the volatility products. You can see it. You can get real-time updates. And it has come down. We were looking at yesterday's. It's come down. So now seeing 26, 22 for later in the month. 22.8 over 22.2. Still in backwardation, but not as bad. Hopefully this subsides, credit spreads go back to normal, and we're going to be feeling pretty good. All right. Now, today's action, pretty good day across the board. Industrial services, very green. Just to point out, some of the lesser known plays, but financials looking good. Apple and Google weak from the Magnificent Seven, but by and large pretty decent. AMD still getting killed. Anyway, let's get into some broader stuff. I've added the long bond and I've added a proxy for Japan, which is weird. Japan was ripping to the upside. So if you hold EWJ as your exposure to Japan, you probably should get a better product. But anyway, we saw markets up as high as 2%, but we sold to end the day. IWM 1.2%, S&P up about 1%, at NASDAQ almost up 1%, the Dow up. Japan down a little bit, but stabilizing, or EWJ at least, stabilizing, which allowed the market to rip. And the long bond, obviously, growth scare was overdone in the massive sell-off. But volatility was down, almost down 40% on the day, rose back up into the close. Let's see what happens there. The 1 day performance, real estate at the top and energy infrastructure at the top. Okay, so that's interesting. VNQ, another real estate proxy. The semi-trade back into the fold. Airlines up there, financials up there. Clean energy down there, oil services down there. I would say on a relative basis, regional banks doing poorly is not a good thing, but they were still positive on the day, so not a ton to infer from that. Good day overall. And here are the factors. Small caps outperformed, but ever so slightly. Everything was up, and small caps got killed yesterday, so let's not give them an award right here and now. And this is the point I was trying to make. You can see Japan here, up 6.6%. So when I use EWJ, the Japan ETF, as a proxy, that's what we call tracking error, I suppose. But before we celebrate too much, a lot of green on the daily, but look at the weekly, look at the monthly. So let's see if this can be sustained and we end up getting a rally. In the oil markets, again, you see more red on the weekly and on the monthly, but some rebounding here. Natural gas back above $2. Oil got to be close to a bottom. If not, then there should be some fears in energy markets. But not so much fear with what's going on in the Middle East and, interesting price action there. The metals, not a great day, not a great week, and not a great month, but gold's still up there, still holding around 2,400. Hard to be bearish when it's consolidating toward an all-time high. But Dr. Copper, now below 4 after being above 5 not too long ago, is certainly noteworthy. Silver, it's always volatile. You see a lot of volatile swings in silver as it's trying to break out and get higher. So let's see, but not great for silver and copper bulls. Agricultural stuff, we're seeing some rebounding on the daily, so maybe the inflation trade is back, at least ever so slightly, on a day when bonds sell off and the market generally do well. But still seeing a lot more red on the weekly and on the monthly. And in crypto, this is a theme. We're seeing red on the weekly, green on the daily, and no more no better way to see that pronounced than in the cryptocurrency markets. So don't be celebrating too early here unless you got out, missed the sell, and then you got in under 50 on Bitcoin. Whew, that's a hell of a trade. But let's see. We got to be diligent here because, volatility is can be a friend for a hedge fund or for a long short trader, but it can be tough to really get a sense of what's going on. But just remember, we're still up about 10% for the S&P 500 on the year. I think it's 8 or 9% now. So, if we're talking about a market crash, then really got to put things into perspective. All right, folks, we'll see you again tomorrow.